Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler down here on the floor of the stock exchange. Stocks opening higher today after a better than expected jobs report. And joining me now with more on the markets and what's behind the latest moves is Joy Yang. She's the head of index product management at MarketVector Indexes. Joy, it's great to have you on the show. And this jobs report today, better than expected. What does it mean for the Fed?
Yeah, better than expected, and what a surprise. But we're looking at one data point, and we know that this data point is very noisy, it's backward looking, and we expect revisions. So we saw the markets react immediately, and we know that now we've moved away from expecting another 50 basis point cut to we're back to hold or maybe 25. So the market is reacting.
And we see stocks hovering near record highs. They've had what was a very strong September, an unusually strong September. Gold has had an impressive run as well. What does this mean for the commodity?
Yeah, so it looks like everything's going up, but we have to keep in mind they're going up for different reasons, and they can't go up forever. Otherwise, we'd all be rich. So we're seeing markets react, but they're still very much focused on optimism, AI opportunities. Gold, on the other hand, is really sensitive to geopolitical risk as well as dollar strength, and that's bleeding onto commodities. And we see commodities now have additionally this new China stimulus. So all three are running on different engines. So we have to be careful in how we extrapolate this to future. Yeah.
Is it odd to see gold prices at record highs at the same time that we're seeing stocks at record highs?
Absolutely, this is quite unusual. And again, it seems rational that gold is responding to all this uncertainty, political risk. But it seems less rational that this market can continue to be so optimistic with tensions going on in both the Middle East and Russia. But again, we have to be careful when we think about the markets because it's still a very narrow leadership concentrated on these large cap tech stocks. And when we look at the broader markets, we're seeing a different story, as well as when we look at Bitcoin, which is much more sensitive to risk. We're seeing that it's risk off and Bitcoin is down in the last few days.
Speaking of stocks at highs and assets across the board are really doing quite well, China's stock market has been on a tear of late after that stimulus was announced. And I'm just curious what that means for the emerging market.
Yeah, so China taking a step back was actually quite down before last week. Since the pandemic, it dropped almost 40%. So it was looking cheap. And certainly China, as the second largest economy, also impacted the rest of the emerging market, which were also looking very cheap. So now we're looking at this stimulus package and the Chinese consumers coming back into play. So that's lifted emerging markets across the board. But we also have to think about some of that investment that came out of China had gone into other emerging markets. So we're seeing all of that play out, and we're seeing how whether or not this momentum for Chinese markets can continue.
And what will be the determinant of that to determine whether or not the momentum that we've seen in China's market can actually be sustained?
So we know that, this is a big stimulus package and the government is doing whatever it takes to implement it. But on the back of the stimulus package, you'll also have very critical to the success of whether or not works is confidence in investor sentiment. So we've yet to see whether or not, all of this stimulus package will work and whether or not the Chinese consumers themselves will come back into the property market and begin consuming again for the rest of the world.
Joy Yang, thank you so much for joining me, of course, after the stock market opens with a big gain here. I see the Dow up 236 points just minutes after the open.